This is a Directors Talk interview with me, Giles Arber, and Robin Savage, Research Analyst at Zeus Capital. Robin, good to talk to you again.
And you?
Now, Tatton Asset Management, it was floated on the A market on the 6th of July last year, 2017, and since then it's performed well. Robin, what services does Tatton Asset Management provide, and what should shareholders expect in terms of returns?
Right. Tatton Asset Management plc provides a wide range of B2B services to UK directly authorised financial advisors. Tatton Investment Management provides asset allocation services, which we'll talk about in a minute, and other group companies provide compliance, business consulting and mortgage services under the Paradigm brand. So Tatton Investment Management enables financial advisor firms to provide discretionary fund management services, which until recently were only available to wealthy clients, to most clients of IFA firms. Importantly, the annual cost of Tatton's tracker service, that's base service, is only £12.50 plus VAT for every £10,000 of assets under management. That's 0.125% charge, so a very low charge, and that's a low charge for Tatton's high quality and low cost services, and this enables financial advisor firms to improve the service and lower the total expense borne by the end investors. Shareholders should expect Tatton to deliver sustainable, profitable growth because all the divisions at the moment are profitable, and Tatton Investment Management Service is growing very strongly, and therefore that's the main driver of the revenue and profit growth. Over the next 3 years, we expect group revenue to rise by 14% per annum, and the profit to rise by 20% per annum. As the group has low capital requirements and it has high cash conversion, the shareholders should enjoy a generous dividend payout as well as capital appreciation, which reflects the growth of the assets under management.
Sounds good. Now, your note, it was called potential doubling of AuM. It suggests that Tatton will double its assets under management over the next 4 years. Can you talk us through your assumptions?
Well, there are two main assumptions, one of which is that I've assumed that market prices remain unchanged. In other words, the equity market stays where it is at the moment. There's no expectation, no assumption in our forecast that there's going to be any market appreciation to benefit the group. I've also assumed that the more recent joiners add as many clients as those which joined Tatton 4 years ago. So as of the 30th of September, there are 405 financial advisor firms using Tatton Investment Management Service, and the total assets being managed were 5.7 billion. Exhibit 4 of my research note shows the split of this 5.7 billion, and it can be split into 4.5 billion, or 79%, which is contributed by 169 Paradigm client firms, which have an average of £26.6 million per firm. And then there's the 1.2 billion, or 21%, which is contributed by 236 non-Paradigm client firms with an average of only £5.1 million per firm. So the difference between these firms are that the Paradigm clients have been there for a long time, many for 4 years, whereas the non-Paradigm clients are relatively new. So when the newer non-Paradigm client firms increase their assets to the average of Paradigm firms, the average under assets under management will increase to £11.7 billion. You can look at it slightly differently, and let's look at it by when the individual firms became clients of Tatton. It can take 3 to 4 years for a firm to transition the majority of its client assets to Tatton. Each advisor firm can quickly recognise the quality and cost efficiency of the service, but the firms have a duty to advise each individual client and to look at the circumstances, and circumstances can cause delays in transfer of the assets to a more efficient service. So our analysis suggests that over the next 4 years, the assets from firms already using Tatton will rise to around £12 billion. And in addition, shareholders should expect growth in Tatton's client base of advisor firms using the service. So in July 2018, a survey of advisor firms by Platform revealed that while 46% of advisor firms were using services such as Tatton, only 15% of advisor assets were actually using this service. This suggests to me that as the regulator takes a closer view on the performance and the cost of various investment strategies used by advisors, there is a potential for assets to grow its client base and its assets under management by at least doubling, probably tripling.
Brilliant. Okay. And how can investors estimate the fair value of Tatton when it's growing so fast?
Well, this is a really difficult issue, but let's look at it first from the bottom up and then from the top down. So first, investors might like to consider 4 elements of the Tatton share price. Our Exhibit 3 shows 3 of the elements that could comprise the share price. So first point is that on the 30th of September 2018, the group had no debt and it had £11.6 million of cash at bank and in hand. And we estimate that the surplus cash is around about £8 million, and that is about 14 pence a share. So secondly, we should look at the value of the paradigm businesses. These are the ones which provide compliance and various other consulting services and mortgage services to IFAs. This business is similar to that of Simply Biz, which is albeit a bigger business. And Simply Biz currently trades on a price-earnings ratio of 14 times. Has recently been trading higher than that, but at 14 times currently. Valuing these profits net of central costs at a 10% discount to that 14, so in other words at 12.6, that would ascribe a value of £29 million or 52 pence a share to the paradigm businesses. So the third element is the value of the Tatton investment management piece. Now this is growing its assets under management at 20% per annum, and it's got operational gearing which should enable the actual growth in profits to be more like 30% per annum. And this should justify a price earnings multiple of at least 24 times, which is a PEG of 0.8, and a current value of around about £2.17 a share. So these 3 elements total 283 pence a share. That's the sort of valuation now, and then if you were to look at the value in a year's time, what you need to think about is what additional value is being created by the increase in the number of firms using Tatton. Now, we estimate that there will be around about 100 firms starting to use Tatton over the next year, and these firms that start will only be contributing a small amount of assets because obviously when you start off with a small amount of assets and then you build up over time. We estimate that these assets will grow over time, and that the value added by these 100 firms will be around about £30 million. In other words, £300,000 of lifetime value per firm to the group's equity value. And this is an increase of 54 pence a share, or 19% of the group value now increased over the next year. So top down, we could also look at Tatton shares trading at 242p, which is 21.5 times our current year adjusted EPS forecast, and current year dividend yield of 3.5 with 20% growth. And we could say that there are very few companies which could have such strong cash generation and dividend generating prospects. So in my opinion, Tatton shares have the potential to deliver both 19-20% capital growth per annum and an attractive dividend yield. I think it's one of the more attractive stocks around.
Excellent. Okay. Talking to us today was Robin Savage, research analyst at Zeus Capital. Robin, thanks for joining Directors Talk today.
Thank you.